Hey guys, this is Mubashir, and today we are going to analyze the Shipping Corporation of India. Right? Basically, we are going to analyze its fundamentals, technicals, right? Like we do for every in-depth video for any stocks, right? So let's start the video. Basically, first we are going to start with the this basic. I mean, what this company do actually. Shipping Corporation of India. Here it is. It's a small cap company. As you can see, it is a have market cap around 10,000 of crores. Right? Not a small cap, we can say micro cap. Right? So basically, Shipping Corporation of India is engaged involved in the business of transportation goods and passengers. Okay, largest shipping company. Okay, so this Shipping Corporation of India is one of the largest shipping company. Company is the largest Indian shipping company in terms of capacity with a diversified fleet profile. It is involved in the business of transportation goods and passengers. This owned fleet includes bulk carriers, crude oil tankers, product tankers, containers, vessels, passengers from cargo vessels. So basically, this company mainly involved in the transportation of overseas transportation of or we can say oil vessels, LPG, and many more things that can be transferred through the overseas. Okay, we can say. Okay, the fleet the company has a total fleet of 59 vessels, including the 32 tankers, 15 bulk carriers, 2 liners, 10 offshore supply with a total of 5 lakh 31,100. Okay, sorry, 53. Okay, 53 lakh 11,210. Okay, okay, DWT. So if I talk about the business segment, tankers plays a major role, that is 67%, and that has been recently increased by the we can say around 3%. Right? And the bulk containers carriers is around 13%, which is reduced. They are now mainly driving into tankers. Linears it is around 9%, which was around 15%. They have also reduced that. Okay. If I talk about the geographical share, so it plays around 77% in India only. They have a major market share in India, and the Singapore it is around 9%, and other countries it is around 14%. For the other country, it has increased by the 5%. So top customer revenue share, if I talk about it, it is India Oil Corporation, okay, IOC, and Hindustan Petroleum HP 9%. But as per this data, as you can understand, they are mainly earning like LPG and other carriers, crude oil carriers. So you know that there is a lots of tension, geopolitical tension is going on between these USA, Iran, and Israel related to the state, not related to the state of Hormuz. It is affected the state of Hormuz, and the major LPG and other crude oil containers is passed through the this state of Hormuz. So for India, it is around 80%, if I'm not wrong. So you know that this company is gonna be impacted more because of that, right? So we are going to see the impact on this shipping corporation of India's share price. So let's start with the technicals, so that let's see what's the impact which is facing, because they are not allowing us to go through that state of almost, right? Okay, here it is. So let's go with the weekly chart so that we can understand if this war has impacted this company or not. Basically, it is going to impact, right? So the war has started around in the start of this month, right? So from this okay, from the March, okay, February, and here it is the March, yeah, from this candle, as you can see, from this candle, if I go with the day by day chart, it will be easier for us, okay, to understand. Okay, So from the March, first March, okay, here it is. This is the candle. So from the start of the war, you can see that it has impacted the market share of this company, and now it is down around 13%. If I check the overall, the most downward side, it is around 18%. You know that recently the US has announced that they are going to postpone the war towards the Iran for the 5 days. So that leads to the positivity in the market that is helping the market to gain, right? And that's the reason the market is up. So if I talk about the overall, this company is impacted too much because of this war, right? So that's the thing. Okay. So let's go with the technical part for the long term. If you look at the chart, actually this is kind of old company, right? So we have to look at the 3 month chart so that it will be easier for us to understand. So the we can say the IPO was launched around 19 first Jan 1990, right? And from that time it has given around 1800% returns. Means we can say within 25 years it has given 80x returns. If you have invested like 1 lakh, it will become around 18 lakhs within 25 years, right? So I think that's the good return, and that shows that this company is kind of stable, right? And as you can see the chart here, initially the company was too much volatile, but now if I check the monthly chart, it will be more easier for us to understand. Okay, company was continuously going up, but here they may have faced some kind of problem that leads to their overall stock price was continuously going down. So now if I check from it is all time high, it is down around 19% only. Okay. So overall the company is doing well and the stock price is also doing well. So let's go with the fundamental parts. Right. So the stock P is around, if you check the stock P, it is around 9.6. Right. And if I tell you industry P, it is around 11. So it is quite undervalued as per the P. Promoter holding, it is 63%. That's a very good sign for the company. Interest coverage ratio is also good. The interest coverage is good. Okay. EPS score for the 5 years it is very excellent. Right? EPS for the 10 years it is also very good. Okay. Quick ratio is also excellent. Current ratio is same. That means too they don't have that much inventory in the not same. It's around same percent. Sorry, 0.108, 0.07. Sure. That shows that it is not. They are not holding that much inventory in their uh, warehouses, whatever it is. Okay. So book value is around 183 and the current market price is around 233. So the overall price to book value is 1.27, while the industry price to book value is around 1.44. So that also show that the companies have quite low price to book value as compared to this industry. So return on capital employed and return on equity is not that much good. Right? I mean, and also the debt to equity ratio is quite 0.33. It is acceptable, not that much high. Okay. Sales growth for the 5 years is 4.84 only, but they are earning very good EPS, right? So even though the sales is not increasing that much, but their overall profitability is increasing continuously. Average dividend payout is 14.1. Okay. The dividend yield, we are going to check for the dividend yield. They are also giving very good dividend of around 3%. That's a very good sign. Right? EBITDA is also very excellent. Right? PEG ratio is not that. I mean, it is in negative. Right? We have to look at that. What's the matter here? Okay. So let's go with the. Let's first check the like for the 10 years. I'm going to say the see the PN EPS trend. Right? So in 2018, they were having a P of 18 and the EPS was around 3.78. Okay, and if I talk about the 19, they were having a P of 3.4 only, and the EPS was around 6.31. Okay, that's good. And 21, they were having 3.5, and the EPS of 19. That's very good too. and 23 they were having a P of 6.8 and the EPS of around 13.71. That's very good thing. And 25 they were having a like P of 7 and the EPS of 20. That's very good. And now they are having like 9.6 P and the EPS of 24.33. That's a very good thing. I mean, the company's P's has been at the very fair valuation if we compare with its trend, and the EPS is continuously going up. So it is a very good thing that is the company is at the fair valuation, right? So if we quickly compare with the it is industry peers, so we came to know that it is now at this second level in terms of the market cap, right? So quarterly sales variance is quite acceptable if we compare with the other companies. They are going very doing very well, right? Also, this company is also doing well. It is on average level. Tag ratio is very bad. I don't know the reason. We are going to check for that. And the sales variance for the 5 years it is quite acceptable. Profit variance for the 5 years is also very good. It is quite too much fluctuating. As you can observe that the sales variance, the profit variance, and pack variance, it is quite too much. Like it is fluctuating. From market price, the book value is quite good. EBITDA is also good. From market price, the sales is also good. Return on equity and return on capital employed. If we compare with the it is industry pay, it is doing well. Okay, and that to equity is also acceptable. P also acceptable. Now, if you look the quarterly results, you come to know that within the span of 3 years, we can say it has from 1500 to 1600. It is not their overall sales has been haven't been increased that much, right? You can see that there are multiple negative numbers in double digit too. Okay, so they are if not efficiently able to increase their sales overall. Okay. Employee cost has been increasing. You can see that it is too much fluctuating. Initially, it was low now, and in the middle of March 2024, it has went to its all-time high. Then again, March 2020. Okay, okay. Have you observed that in the March 2024, it has went to it is all-time high. In the March 2025, it has went into it is all-time high again. That is 12.33. So I think there is a cyclic nature because of which they have to increase the salaries or they have to increase the wages or they have to employ more people in terms of contract with the contract. So that leads to increasing the like cost for the employer in the March especially in the month of March. It is a in cyclic nature I think. So if I talk about the operating profit margin, it is from 31% to now it is 42%. It's a very good sign, right? It's too much fluctuating, but it is not at 42%. It is very good. Interest obligation has been also increased slightly. I think they have bought more asset because of that. As you can observe through this depreciation, they have increased some more. Their depreciation has been increasing. That shows that they have maybe bought more asset for their company. That leads to their overall interest obligation has been increased because they are buying with the debt. Right? Net profit, their net profit from the 260 crores to the 400 crores. That's a very good thing. Even though they are not efficiently able to increase their sales, but their overall net profit has been increasing. As I told you, their sales has been haven't been increased here. As you observe that sales for the 5 years is only 4.84, but their EPS was very excellent for the 5 years and for the 10 years too. So yeah, it is they are doing well in terms of quarterly results. If I go with the profit and loss statement for the 10 years from the 4,300 crores to the 5,600 crores only. So that's a very bad sign. I mean, if I would say, they are hardly able to increase their sales around 25% for the past 10 within the 10 years. Very bad sign. But I think their overall profit has been increasing, right? Let's see. Uh, Manufacturing costs, they are efficiently able to manage their manufacturing costs. Employees costs, they are efficiently manage their employee cost too. Operating profit, that's the thing. even though their sales is not increased that much, but their operating profit margin has been increasing continuously. As you can see, in the middle of in 2019 and 2018 and 19, their operating profit margin had been reduced, but afterwards they have tried very best, and they have done very well. Now their operating profit margin is around 31%. In terms of obligation, as you can see, it is quite decreasing. Not it is fluctuating. You can see the appreciation obligation is also quite fluctuating. If I go with the net profit from 200 crores to the 850 crores, as we can say around four times. So it's a very good sign. Right? They are not able to increase their sales that much within the 10 years, around 25% only. But yeah, their overall APS is increase around, sorry, net profit is increase around four times. That's 400% increase. Has been from 200 to the like from 300 to the 850. So that's a very good thing. Around 300% we can say. Okay. So now if I go with the balance sheet, you can see the equity capital. Okay. Reserves, you can see the reserve is increasing slightly, not that much. They are, but yeah, they are increasing their reserves. Borrowings, they are continuously trying to reduce their borrowing, especially if you look at this long-term borrowings from 6,000 to it is now around only 1,500. Short-term borrowings also very less. So overall their borrowings has been reduced. If I talk about the fixed asset, their fixed asset also been reduced here, right? From 12,000 crores to 6,700 crores only. Right? Their ships vessels has been reduced. That's the main thing. And if I talk about current working capital, there is no current working capital. They are also doing investment. Consider from 77 crores to the 826 crores. So yeah, that's a very good thing for the company too. But the major thing that you need to look at these vessels, ship vessel through which they are earning. They have sold their investment assets for around assets of around 5,000 crores. So that's a very bad sign. I mean, they are selling, they are not buying, they are selling their assets from 12,000 to 6,700 only. Now, let's start with the cash flow. Okay. Now, if you look at the cash flow statement or cash flow from the operating activities, so for the past years, they have earned around 1,400 and around 1,000, that is 24,000, 850. Okay. So that is around, we can say they have earned around 20, sorry, 33,000, sorry, 2,300 crores approx within the 3 years. Okay. And if you compare with their profit and loss statement, okay, 23,000 crores, oh sorry, 2,300 crores, 8 and that's okay. So they are actually, if I would say, they are not just doing credit sales, they are actually doing cashes. You can see that they are actively collecting their cash. So that's a very good sign for the company. I mean, they are not doing the any credit sales, right? Yeah. And if you see here, if I go with the fixed asset purchase, as you can see, they are continuously buying their asset, but also there is a fixed asset sold here too. Right? And finance, they are proceed from the repayment of the borrowing. They are continuously reducing their borrowings. Interest payments are continuously reducing. It's a very good thing. So overall, if I would say that the very good important thing, which is the cash flow from the operating activity, from where we look at that if the company is really doing cashes or they are just doing credit sales in order to show the more profit. But yeah, they are doing actually cashes. Right? That's a very good sign for the company. And if I go with the ratios, the debtor days, they are not able to efficiently manage this. But yeah, it's keep fluctuating, and yeah, it is not that much concerning if you compare the trend. Okay, okay. There is no inventory days and base table has been shown here. Let's go if there is a let's see the shareholding pattern. As you can see, there is no change in the promoters holding FIS. If you closely look at this FIS holding, you come to know that it is continuously increasing gradually. This is a very good thing, right? and yes, continuously reducing their stake in the company. But yeah, public holding remains same, and the promoter holding and FIs uh, are continuously increasing their stake in the company. So that's a very good thing. I prefer mostly this FI holding and the promoter holding, not just public holding. Yeah, sometimes I also look at these TIs because they are also important part. But here they are continuously reducing their stake in the company. Right, but the main players, that is FIs, continuously increasing their stake. That's a very good thing. If I see the recent resignation, which shows the major concern in the company, there is no recent any resignation happening in this company. That's very good thing. Okay, so overall, if I would say that the as per the technicals, as per the fundamentals, like as per the PEPS trend, and if we compare with the other peer comparison, quarterly results, profit and loss statement, balance sheet, everything the company is doing very well. Apart from this asset sold, I mean, yeah, they are continuously selling their asset, which is eventually going to impact their overall profitability. But even though their sales was going continuously, they are not efficiently able to increase their sales, but still they're because of that operating profit margin, they are efficiently able to increase their EPS. Right, their net profit is continuously increasing even though their sales is not increasing that much. So yeah, as per this all observation, I'm not saying the research on it, but if you're planning for any long-term investment, I think that's a very good company. This is a very good company to invest for the long-term especially. Okay. Thanks for the watching. Have a nice day.